Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Monday morning pre-market webcast. Okay, so what are we looking at today? The Spain deal caused some, euphoria is really the only way to describe last night. We traded as high as 1342, and we made a lower high at about 2 a.m., 1339.75, and it's been coming down ever since. I told my subscribers on my webcast last night that, the deal in Spain, the reality of the deal, after people can sit back for a minute and take a look at it. And I think this is what's happening here. There's two things. First of all, that's not enough money to bail out Spain. Second of all, the domino effect is now in full force. Ireland, Italy, Portugal, Cyprus, you name it, and they're going to be in line for their bailout. And the reality is they don't have enough money to cover everybody. And so while the fact that they agreed to a bailout with Spain is a positive because it demonstrates that Europe is willing to do, I guess, what it needs to do to solve this thing, if bailouts are what you think solves it. But the reality is that it's not enough money, and there's going to be a lot more bailouts required now because of the deal that was agreed to this weekend. And so what was initially a very positive thing for the market is now you're seeing 1342 down to 1326. The other thing I told everybody last night was I thought we would fill the gap. I didn't think we'd fill the gap by 8:30 a.m. Eastern time, but the market is on a mission to fill that gap. And the current trade is 1326.75. So a couple things. If you're not short right now, it's too late. Just like I told everybody last night, if you were long over the weekend and you held that risk, that was fine. But you don't buy 18 handles up, and you certainly don't short in the hole from 1342. So let's see what happens when we fill the gap down at 23. If we fill the gap down at 23 and you see some support, there's a low risk long entry there. You can get long down at 23 with a couple handle stop and see if we can retrace some of this move back up to 1342. We may not retrace it all the way back up, but you can get a decent little trade out of it. Now, if that becomes another lower high, because now we've got 42, 39.75, 2 a.m. Eastern time, and we get another lower high here after the market finds some support off of this pullback, that lower high, that rip's got to be shorted. And you do that with a couple handle stop over the top, and you're looking for let me pull up my table here. You're looking for, at that point, you're really looking for the cluster of support. That's the 20-day pivot, the 3-day pivot, the 200-day exponential moving average, and the 20-day exponential moving average, which is from 1310 to 1312. Because if they break 23, there's going to be a lot of nervous people. And there's a fib level at 1318.80, and if we lose that level, then you've got daily pivot at 1315. That could be your initial target off of a short of a lower high. But when we get down to 1310 to 1312, I would expect to see some support and some consolidation down there. So let's do the full table. Current trade 1327 quarter. So on the upside, 1332 quarter, which is your 45-day pivot. Then you've got 100-day exponential 1334.70. 50-day exponential 1337, 1342, and 1347. On the downside, you got 1323 gap fill, 1318.80, 1315, 1312 to 1311, which is that cluster of support, and then you've got 9-day pivot below that, 1306.42. So everybody have a fantastic day. Mike Vacchi, Princetontrader for Mr. Topstep. Everybody have a good day. Use stops and be hedged. It's a pretty volatile, two-sided market, but that's where this is where I think we're headed. And I will see everybody tomorrow morning with another webcast.